Hello ladies and gentlemen, welcome to today's video. Today we are going to talk about how to boost our mortgage chances. How to boost our mortgage chances. Especially I'm going to talk about how I boosted my mortgage chances, taking me from nada to property ladder. So if you're out there and you're interested in buying your first house, or maybe you've been refused in the past and this time around you're kind of like want to find a way to boost your mortgage chances, continue watching and find out more. Most of us want to buy a house, we want to get on the property ladder, we want to belong in these communities that we now call home. We want to fit. We dream to have the whole 9 yards, a house with a manicured hedge, a car, kids and a dog like we see in the movies. It's only reasonable. We want to invest in something tangible, something good, something you can touch, something we can call ours. If you've lived in the UK long enough, you know that buying a house is a huge financial commitment. We are talking about 25 years of mortgage payments, and the process can be rather daunting, especially if you're a first-time buyer. What makes it harder for people in our position, I mean migrants or immigrants, is that we are new in the country. We have a lot of responsibilities. We are raising children. We are going back to school. And on top of that, we have to honor the responsibilities in the countries that we come from. So getting a mortgage in a country that is originally not your own can seem like climbing Mount Everest, especially when you're navigating the laws, the procedures, the policies, and the bureaucracy. So how do you go about it? First, don't expect every lender to fancy you. Yes, you have a lot of money. You're affluent, you're opulent, you're wealthy. Just because you have a lot of cash in the bank doesn't mean that you'll be accepted for a mortgage. It doesn't work like that. In UK, things are not always straightforward. Even if you have money in the bank, you will need to prove where the money came from. None of these things of money laundering or fraud, you need evidence where your money or deposit originated from. Otherwise, you find it tricky to convince the bank to approve your mortgage. The bank would demand to see money building up in your bank account over a period of time, usually 6 months or more. You will need bank statements showing regular in-payments from your employer, pension, or any other legal source of income. And the bank needs to see this money slowly growing in all your accounts. If say you get money from the sale of a property or any other assets, you need to produce these alongside bank statements showing any proceeds from the sale. This especially goes to my African people. If you are using money from abroad to finance your mortgage, this will be traced. It's better to be straightforward than to be caught out in a lie. Same thing applies to savings. You need to provide copies of bank statements displaying in payments. Again, all sources of which must be traceable. You cannot buy a property in the UK using cash. Don't even bother if you're thinking about it. Banks will not accept it. The second thing you need to do is to check your credit report before the bank checks it. Every bank has its own method to decide whether it wants to give you money. If you fit their box, you might be accepted quickly. If you're not, your chances of rejection will increase. You're going to need to convince the bank that you've got the financial discipline required to pay back your mortgage. One way the bank investigates whether you have financial discipline is by checking your credit report. This is to find out whether you pay back money you've borrowed. Any accounts you've opened over the past 6 years will be checked. This includes credit cards, loans, overdrafts, other mortgages, and even some bills like gas, water, or council tax. So you've got to make sure all is top-notch and up to scratch, as you don't know which one your bank will be checking. The banks normally use 3 credit reference agencies. These are Experian, Equifax, and TransUnion. Some of them will cost you, but others are free. I think TransUnion is free. By the way, just because you have bad credit doesn't mean that you're automatically ruled out from getting a mortgage. But you certainly run the risk of getting refused. So to give yourself the best possible chance, take time to get your credit report in good shape. Now that you've checked your credit report, what's next? Let's say you find errors. Something was left on your credit report by mistake. Correct these errors as soon as possible by talking to credit agencies. If your credit report has the same error across the board, if you get it corrected with one agency, the information should be sent to the others. But it's better to contact them yourself to ensure they all have the right details. Then afterwards, you need to contact the bank. Write to the bank and say you think the error is unfair and ask them to wipe it from your file. Or you can ask them to add a notice of correction. The notice of correction is where you get to explain the default. Ideally, you should write around 200 words. These will be included on your report and it will explain the problem. For example, you can say it was a joint account and the debt was run up once. If, say, you are in default, be prepared to settle what you owe in either part or in full, or try negotiating. And as part of negotiations, you could make a condition of settlement that the default is wiped off your credit file. Companies sometimes do this for disputed defaults. If it all fails and the bank won't budge, then you, my dear, can complain to the financial ombudsman. This is your right. You have the right to go to the free independent financial ombudsman service if you believe the error is unfair. But you have to make sure that writing to the lender didn't work and that you did everything, that you went through the grievance processes up to the top. Otherwise, the ombudsman will tell you to go back. If you're wondering what the ombudsman is, it's the official body for settling disputes between individuals and financial institutions. It acts as an impartial adjudicator. It has powers to rule that the debt is unfair, that's if it is, and that the default can be wiped. For those of you who took out financial support during the pandemic, check if this could dent your mortgage chances. At the start of the pandemic, the government introduced various support for those struggling financially. These included the furlough scheme and payment holidays on credit cards and loans. If you accepted help from the government, this could actually affect your chances of getting a mortgage. But you need to check this out. Banks can find out about payment holidays and other forms of forbearance. While generally speaking, this shouldn't appear on your credit file, but a bank giving you a mortgage will still find about it in other ways. If you are self-employed and you took out the self-employed income support scheme, or those of you who use the furlough scheme, you need to explain this to the bank with lots of evidence. Another thing that you need to do is to register to vote. Well, you have to be in the politics. Without it, you can't get a mortgage. And this is a potential deal breaker not to be messed with. While you can have a perfect credit score without being on the electoral roll, it's very difficult to get a mortgage without it. Banks use the electoral roll data to identify who you say you are and where you say you live. Your credit report will say if you're on the electoral roll or not. But you can also check with your local council. You need to do this as early as possible. It can usually be added within a month, but sometimes it could take longer. So the earlier you do it, the better. Another thing you do not really want to forget is that if you are in a relationship and you separated, you need to delink yourself. You need to delink yourself from your exes to stop their credit history wrecking your chances of a mortgage. Your finances will be linked to someone if, say, you previously applied for joint credit, such as a bank account, mortgage, or a loan. If you're now separated or have nothing to do with them, you have to delink yourself. If not, any late payments or offenses they've committed will reflect badly on you. All you need to do is to ask for a notice of disassociation. My personal advice is that never link yourself to anyone, as their credit history will affect yours. If you have, delink yourself quickly. Run! Run! Right, okay, moving on. The next thing is carefully manage your available credit. So what is available credit? First of all, we all have credit. You might have a phone that is credit, in most cases. It's the difference between the combined debt balances in your cards and bank accounts and your combined credit limits or overdraft. How do I put this? It's basically the money that you have in your bank account or savings. It's the difference between the combined debt balances on your cards and bank accounts and your combined credit limits or overdraft limit. Basically, you need to strike a balance between not having too much and not getting too close to your limits, which might make it seem as though you are at the edge of your finances. You need to be in the middle. You get it? Did I explain that right? Anyway, you can research it. Okay. If you have debts, it's preferable that they make up less than half of your available credit. To really be safe, your debts should equal to 25% of your available credit. Let me give you an example. If you have a combined limit of £10,000, it's better you use less than £5,000 of it. But ideally, you should be sticking to use only £2,500. I know it's tempting because sometimes you want to get out of debt, but avoid lowering your limit so you're suddenly close to the edge. On the other hand, don't have tens of thousands of pounds of available credit. It's not good for you. There's no point having credit when you're not using it. It can actually dent your credit. All you have to do is to strike the middle. This is an art, not a science. Try to average around 25% of your available credit. But if you need to use more, then definitely keep it below 50% in all cases. Of course, if you're in the position of paying off your debt, please do so. We are moving on, we're moving on. The other thing you need to do is close your old inactive accounts. They can kill your application. If you're not using an account, it may be worth closing it. Leaving it open might be a fraud risk and it could display out of date details. Having said that, when applying for a mortgage, longer stable credit relationships are a positive. Let's say you have 2 credit cards, one recently opened and an older one. It's probably not worth closing the older one before the mortgage application, as you could lose the credit score boost it gives you. Remember also, if you're closing an account, just cutting up the card isn't good enough. You must tell the bank, you must tell them that you want the account closed. Always and always pay your bills on time. Pay your bills on time. I know it's obvious, but some people don't do it. So I'm going to emphasize this. Always pay your bills on time. If you ever miss a payment, it will go on your credit file. No lie. All missed payments count against you on your credit file. So it's important to pay them. It's important to be up to date. So it's important to keep up all your repayments on all your outgoings. A missed payment default counts against you for at least a year. And they will stay on your file for the next 6 years. No lie. No lie. You missed one thing, it's going to stay there for 6 years. So for 6 years, you're going to be blacklisted. For 6 years, the banks are going to know that you missed a payment. Even if it was £5, they will know about it. So the best thing is, if you took out a service, be honest, be faithful, pay it off. Just miss one mobile phone payment, and it could be the difference between getting a mortgage and not. Just a mobile phone. If you know that it's hard to keep up with your payments, maybe it's better to set up a direct debit so that all your payments are made on time. If you want to boost your mortgage chances, don't apply for other credit shortly before you take out a mortgage. Try to avoid applying for credit in the 3 months before getting a mortgage. It could hinder your score and lead to rejection. Leave at least a 6-month gap to be absolutely safe. This is because lenders will search your credit file every time you apply for a loan, credit card, overdraft, and also mobile phones. These have started even searching for utility bills, so you have to be really careful. That's if you want a mortgage. This search, known as a hard credit check, is registered on your file, even if you don't take out a contract. The more searches you have in a short time, the less likely you are to be granted credit, as you could be viewed as desperately seeking borrowing. But if you really need to apply for credit, it's unlikely that one application will have that much, provided it's affordable. By the way, there are loans that you need to stay away from, like payday loans. Some banks or lenders will decline you for a mortgage if you had one in the past year. So stay away from them. Another thing that you need to do is to cut back on spending before you make your mortgage move. Banks are likely to want to see your bank statements to get a good idea about your outgoings. One of the reasons is that banks are required to trace test borrowers. This isn't hooking you up to wires checking if you're telling the truth. It's checking you'd still be able to afford your mortgage if interest rates went up, say to 6% or 7%. Will you be able to afford the mortgage? So they have to test you. The bank may ask to see your latest 3-month statements before you apply. It will use these to check that your income matches what's on your payslips. It might also use them to examine your recent spending, so it's worth tightening your belts in the months before you apply. Don't go buying rounds of drinks for everyone in the local pub or spend every Saturday in the nightclub, especially if you're applying for a large mortgage. That will put pressure on your monthly budget. It also makes sense to live a little frugally in the run-up to buying your first home. Another thing is stay out of your overdraft. Stay out of your overdraft. If you are constantly in your overdraft, this could be seen as living close to the edge of your finances, so avoid it if possible. In fact, some lenders may not tolerate you being in your overdraft at all in the last 3 months. If you have no choice but to be in your overdraft, then you really shouldn't be getting a mortgage. It's the hard truth. For those of you renting, you can use your rent payments as credit card boosters. It does work. All you have to do is to pay your rent on time. There are free schemes that you can use to boost your credit ratings. Sign up to these schemes for at least 6 weeks for your rent payments to actually start appearing on your credit file. The longer you stay signed up for, the bigger the impact paying your rent on time should have on your file. You will start seeing significant improvements in your credit score, which can even jump up to 250 points. Yeah. Of course, it will depend on your personal circumstances, but it's well worth noting that the only way you can potentially reap the benefits of this is if you always pay your rent on time. Miss a payment, and it could be off-putting to banks when you apply for a mortgage. The last thing is sort your paperwork. Sort your paperwork to speed things up. Banks need proof of your income before they can offer mortgages, so it makes sense to get your paperwork together in advance. Sending all your paperwork in one batch speeds up the process because it reduces the chances of your application being reviewed by more people. If your bank doesn't want photocopies, then you need to send out originals. You need to prepare this a few weeks in advance. Keep a file, put them together. Every time you get a statement or any other original documents, put it in. You'll find that you're organized and it will make the mortgage process easier. Buying a home is the biggest purchase you can ever make. Whatever your reasons for buying one might be, don't look at it as if it's a wealth-building move. This is a place where you're going to live. It is a place where you and your family will build memories. It's not something that you can easily cash in. It's the roof over your heads. It's the shelter for your family. So it's only reasonable and it's important to start it right. I hope you enjoyed the video and that it helps you to kickstart your property journey. I really hope so. Until next time, I shall see you in the next video.